Tesla has had a monopoly for almost a decade, and now with Rivian coming out at the end of the summer, they truly have competition.
If you're to ask a Tesla investor what they thought about a Rivian, you'd probably hear some of the following thoughts. Number 1, they'll be the only competitor to survive the EV transition in America. Number 2, the vehicles drive great, a little quieter and smoother than my Tesla, with a lot nicer of interior. Number 3, the CEO, RJ, is amazing in interviews. I wish Tesla's CEO would act more like him. Oh, and speaking of interviews, Scrivens was just on CNBC a few days ago talking about their Q3 deliveries and the outlook for the company. Let's listen in to what he had to say.
Are you seeing any weakness or any areas that give you cause for concern with the consumer right now?
Yeah, well, we saw, between Q2 to Q3, we've seen a significant step up in deliveries, of course, a step up in production.
And we know that we're going into price-cutting mode within the EV industry. Yeah. Are you noticing any erosion?
We've as you know, we've maintained our pricing, and the demand for the products is very strong. So we've been able to keep that consistent with what we've had in the past.
You've got an average loss of almost $33,000 per vehicle. And you saw the Journal article yesterday, and people are saying, well, when are you going to be profitable per vehicle? You've already said by the end of next year. Are you seeing acceleration in bringing down those costs?
Yeah, so this is our Q2 results. We had a loss of about, as you said, just over $30,000 per vehicle. That is improving quarter over quarter. So we're seeing significant progress. And what we're going to see as we go forward is a very clear staircase or set of steps that get us to profitability as a business. And of course, that's the objective. And the ramp of our production plant is really foundational and key for that.
You've got about $9 billion in capital on hand. You've said you've got enough to get to R2. Are you still comfortable with that?
For us, as we think about building out the business, that's not just ramping production, but building our service infrastructure, building all of our go-to-market activities, parts distribution, making sure we efficiently deploy capital is really a key focus, while we simultaneously balance that with all the ramping and growth initiatives we have. Of course, that being our next set of products with R2 and Atlanta. So we're very cognizant of maintaining a strong balance sheet, but we haven't really commented on how we think about the capital markets.
But still comfortable with your last guidance?
Well, we're very comfortable with the fact that we've maintained a strong balance sheet. That's something we'll plan to continue to do.
Great. A step up in production and deliveries because the consumer is liking their product, and they can maintain pricing because of the demand. Maybe Rivian's going to buck the trend in the electric vehicle world and start posting some profits soon on their cars. RJ sees costs coming down, profitability next year, so maybe, we're going to see another EV company start making money. With $9 billion cash on hand, he thinks they're comfortable with their strong balance sheet. No wonder the stock shot up 9% the day after the interview. Very cool. Oh, there's this Bloomberg interview from RJ 2 months ago. I wonder what they talked about. Let's find out.
You lowered your adjusted loss guidance for the year to $4.2 billion, down from $4.3 billion. Still a lot of billions, RJ. When will you raise more capital, and in what form?
But the cash balance we've put ourselves, or the cash that we have, has put ourselves in a position to not need capital through the end of 2025.
If you're a Rivian investor, I'm sure that interview calmed your nerves because they didn't strongly raise guidance after their Q2 earnings report. And the cherry on top, no need to raise cash until 2025, says RJ. This is comforting because it wasn't but in March of this year, Rivian felt the need to sell $1.3 billion in convertible notes to pad their cash reserve due to what some analysts were saying was flagging EV demand. On your screen is the press release from Rivian with their announcement of selling convertible notes for that amount. What's this though? Another press release that looks exactly the same, but dated October 4th, 2023, and has a larger amount of notes to be sold at $1.5 billion? I thought they didn't need to raise cash for over a year. If you were taken aback by the announcement yesterday and the price action of Rivian today, with its shares falling over 22%, I think you have the right to be upset with the Rivian CEO's financial guidance. But regardless of what he was saying, taking a quick look into their books, there's a glaring cash burning problem. I think it would help to briefly familiarize everyone with Rivian's balance sheet, historically that is. Before Rivian ever went public, they are backed by large corporations like Amazon, Ford, and T. Rowe Price. Everyone was looking for the next best EV player, after Tesla of course, and Jeff Bezos wasn't a fan of Elon anyways, so why not fund a competitor? Before Tesla went public, they only raised about $170 million privately, and in comparison, Rivian had $11 billion in private funding before ever going public. Rivian then geared up for an IPO, and in the offerings prospectus, Scaringe can be quoted saying, "We have made decisions and investments with the objective of maintaining a long-term growth orientation that creates value for all stakeholders, including our employees, customers, partners, communities, shareholders, and the environment." Rivian stock is down almost 90% from its all-time high. Elon Musk would famously respond to the IPO valuation by tweeting, "Don't want to be unreasonable, but maybe they should be required to deliver at least one vehicle per $1 billion of valuation before the IPO." Regardless of Elon's suggestion, Rivian would indeed go public and rake in $12 billion, or almost 50 times what Tesla's IPO brought back in 2010. So with their private funding and now money raised in its public offering, RJ Scaringe's company has brought in $23 billion. That's a hefty figure, but what can you really do with it? I think it will help to put this amount of money into perspective, and we'll do that with a Tesla comparison. Some sources say Tesla's Model S development and production facilities cost about $1 to $2 billion, though they repurpose some old facilities at Fremont for a discount. How about the Model 3? Maybe that's more fair. Well, Tesla allotted as much as $2.5 billion in the development for it. And Tesla's Gigafactories? What are some known costs for them? We know Giga Shanghai and Giga Berlin are estimated to be about $5 billion each. It's feasible then, with $23 billion, you can build 3 Gigafactories and finance the development and tooling for 2 EV models from scratch. Oddly enough, Rivian only has 1 factory, but with plans to spend $5 billion building a second factory in Georgia, which just got Supreme Court approval this past summer after a legal spat about tax incentives. Don't ask me where that $5 billion is going to come from, but by the end of the year, Rivian would have raised $26 billion, and with that figure, I'll offer one last financial comparison. From Tesla's IPO to the beginning of 2018, 7 years later, the company raised $19 billion through stock, debt, options, and warrants. Now that we put things into perspective a little, we should talk about why they needed to raise cash. If they raised $26 billion and it's been less than 2 years since their IPO, what the heck is going on? Just 2 months after going public, 2021 came to a close, and Rivian had $18 billion left on hand. The first quarter of 2022 started a trend when the company lost $1.6 billion net. The trend hasn't stopped to this very day because they posted average quarter losses of $1.54 billion every quarter. The result of this inability to be profitable or even slow down spending was a cash balance of $9 billion in the middle of quarter 3, 2023. If you're to extrapolate these losses over the next 5 quarters, you can expect Rivian to have $2.5 billion left by the end of next year, and that includes the $1.5 billion they plan to raise starting yesterday. Even if they somehow start showing some financial discipline in the coming quarters, once they break ground on their new factory, you just have to expect them to raise more capital somehow. So how does Rivian get out of this mess, or why are they in this mess? If you ask RJ, he would tell you significant supply chain problems and ramp problems with their factory kept costs high and production numbers low. Another issue last year was thousands of reservations at lower than desired prices accelerated their losses as material costs rose at the same time. Combine these with the fact they developed and are manufacturing 3 different vehicles, the R1T, the R1S, and their commercial van, along with a 4th in the R2S on the way. Maybe Rivian is unlucky and found themselves as a company starting up during a once-in-a-lifetime pandemic, an economic shutdown, and the highest inflation in a generation. Nevertheless, they made it through by streamlining production at their Illinois plant and finding ways to lower their capital expenditures. They addressed some of their supply chain problems with trying to be more vertically integrated, with moves like building a factory to produce their own engine, the Enduro. They even got their loss per car lower quarter after quarter. Maybe 2024 will be their turning point, but a turning point doesn't mean profitability, it just means losing less money. For years, the Tesla doomer and gloomers would spout off and repeat the phrase, "The competition is coming." But in Rivian's case, the competition's already here, and it's going after the only segments they cater to, the SUV and pickup truck. You've been seeing them focus on their R1S to lower their exposure to the EV pickup truck market, but the new sport utility vehicle offerings from the OEMs are just around the corner. Off the top of my head, I can think of the Chevy Blazer and Equinox, Kia EV9, Honda Prologue, Fisker Ocean, Volvo EX30 and the EX90, and the Polestar 3. And those are just the SUVs. What about the new EV pickup trucks? The Chevy Silverado, GMC Sierra, Ford F-150 Lightning Flash, and of course, the fan favorite, the Cybertruck. But I recall that Scaringe isn't really worried about the Cybertruck.
I have to ask you, you're about to have a competitor on the horizon here. What do you think of the Cybertruck?
I think if you were to think of like the Venn diagrams of customers, there's probably not a lot of overlap in terms of